Hey everybody, Smart Silver Stacker here. Welcome to another live stream. Got a quick update for you this evening regarding the continuing escalations in the Middle East. We're going to talk about these reports of data cables being severed by Houthis in the Red Sea. Talk about why that's a real problem for the global economy, among other escalations in the Middle East that we'll cover here briefly. And also, I want to get into some interesting developments we're going to see later this week surrounding the gold and silver market, why we might see a big move, and it could be to the downside. So let's just get right into it this evening. Do me a favor, if you can hear me loud and clear, put a 1 in the chat. And let's take a look at this report from the Jerusalem Post that Houthis have knocked out underwater cables linking Europe to Asia. Now, this is a report that they're mentioning. From the headline, it sounds like something that has just happened. However, if you go down here to the first paragraph, they mention in this 4 underwater communication cables between Saudi Arabia and Djibouti have been struck out of commission. However, they caveat this by saying in recent months, presumably as a result of attacks by Yemen's Iranian-backed Houthi rebels, according to an exclusive report in the Israeli news site Globe. So without corroboration, I wouldn't really read too much into this report. However, more recently, just a few minutes ago actually, we got this report from Bloomberg. Damaged subsea cable in Red Sea highlights telecom vulnerability. And this is based on an interview that was given with Pranesh Padayachi, who is the Chief Digital Officer of Seacom Limited, the South African company that controls this cable. They detected a fault this past Saturday, and it may not be as extensive as it was being indicated in that previous report from the Jerusalem Post. However, there is a tremendous amount of information that flows through the Red Sea. It is an area that links 3 continents. There are a lot of these ocean-based data cables. It's a big portion of internet traffic that travels through this area. Now, regardless of whether or not the Houthis are directly responsible for disabling some of these cables, the fact that there is an ongoing conflict here creates a real problem that it may be impossible or extremely difficult to repair these cables. Now, it's not uncommon, according to this report, for these cables to be damaged by fishing ships, trawler nets. I don't know how much of that is going on in the Red Sea at the moment, but the point is, maybe or maybe not, this is sabotage. If it is, then we can probably expect a lot more of it. You know, this one cable going out, not a huge deal. The internet is in some ways a decentralized network. They can reroute network traffic around one cable. But if a significant number of these fiber optic cables get destroyed, this could lead to some real problems for our digital economy. And this is just another example of how conflict and war has a tremendously inflationary effect on things. You know, if our global economy loses efficiency because of a degradation in telecommunication services, well, that means higher global inflation, right? The less globalized the economy is, the less efficient it is, the less efficient supply chains are, the higher the inflation will become. I see some people in the chat here saying, please don't become clickbait. I don't really think this is clickbait. This is a real problem that's going on. This is an escalation. This is a way that a force like the Houthi rebels could potentially target the West, the globe as a whole. It's a way they could stir up a lot of trouble in the region. And look, this is not an isolated escalation. I just think this is an important one to keep an eye on, because should we see global telecommunications come under pressure, you might see it reflected in the price of a variety of goods. And, you know, this is coming at a time that we're seeing an increased risk of cyber attacks here in the United States. Global telecom infrastructure is in danger. And I think this is a risk that we should not neglect. And, you know, when you see things like this, physical infrastructure, digital infrastructure, all of these things coming under pressure, it's one more reason to have some assets outside of the digital financial system. But, you know, we're talking about escalations in global conflict. There's a report from the Telegraph telling us today that the Prime Minister of Slovakia has let it slip that NATO and EU member states are preparing to deploy troops to Ukraine. Now, this might be a bit of a gaffe. This guy is characterized by the Telegraph as a pro-Russian populist. However, you are beginning to see rumors fly that NATO troops may be headed to Ukraine, so no sign of that conflict de-escalating either. Again, back to the Middle East, you've got the IDF wiping out a Hezbollah commander in Lebanon via an airstrike. This is a continued pattern of we're seeing deeper airstrikes deeper into Lebanese territory on the part of the IDF, and this marks a real risk of regional warfare escalating as well. So, all of this, again, will be major sources of inflation. A lot of United States funding will be delivered to Israel, likely in the form of munitions, military assistance. This is going to end up costing billions of borrowed dollars. Should a regional war break out, we might become involved in a more direct way, so something to keep an eye on. You can see this all reflected in the price of crude oil, which remains elevated despite a global economic slowdown. You've got twin factors at play here in the crude oil market: the possibility of a regional war disrupting supply, but also the possibility of a major economic slowdown globally could reduce demand. But still, the risk of higher inflation from elevated crude oil remains high. Now, let's move on to the precious metals. We've got silver today having an interesting day, was down fairly significantly. However, you can see that even in just the past few minutes or so, it's begun to retrace much of those losses from earlier in the session. Kind of a similar story in gold, actually kind of up here in the overnight trading. It was down earlier today. It has regained that ground and then some. Really, though, the precious metals both seem to be treading water here, waiting for some catalyst to break them out of what seems to be a range that they're trading within. And we might get that later this week. Of course, we remember the events that we saw, this big sell-off in the metals following the release of CPI data from January. If we zoom out this chart, we can see this big sell-off, and that was kind of across markets, but it was pretty hard in gold and silver. And it's possible that we may get a repeat of this sell-off on Thursday, because on Thursday, this is from fxstreet.com, it's the forecast for the PCE data, the personal consumption expenditures. This is what they call the Fed's preferred measure of inflation. And you can see from this chart here that it has been ticking down from its highs in 2022 of around 5.5. The last reading we got was 2.9. What's anticipated here is a 2.8% year-over-year change in the PCE. And the real risk here for the precious metals, it remains that we will get a hotter than expected inflation print, and we could get another sell-off. So keep an eye on this data. This is going to be released at 10:30 a.m. Eastern Time on Thursday. So, the same goes, of course, if we see perhaps a cooling of inflation here, which I don't think is too likely, but let's say it's below expectations, you may see gold and silver actually catch a pretty nice bid. Of course, we still have this bizarre dynamic playing out in the precious metals markets where higher than expected inflation causes them to sell off and lower than expected inflation causes them to be bid higher, all because of what is really driving markets now. It's not, fundamentals for any of these assets. It is primarily just the anticipation of more easy money from the Federal Reserve. And when inflation comes out hot, investors are still under the auspices that the Fed will do something to fight that inflation. In this case, they will delay rate cuts. That seems to be what everybody is expecting. Neglecting, of course, the fact that ultimately the Fed is going to be forced to cut rates. We've talked about this kind of ad nauseum on recent live streams and videos, but the same dynamic is in effect So keep an eye out on Thursday. This PCE inflation report really could be something that moves the needle for the price of gold and silver. And unfortunately, I'm expecting it to be probably higher than expected on the hot side, just like January's CPI number. And, maybe it's not unfortunate. It is one more opportunity to get into some hard assets. Of course, if we do get a big pullback, you want to buy some. Check out SD Bullion's channel sponsor. It's where I buy my gold and silver. They've actually got some sales right now. It's pretty interesting to see the premiums coming down on this stuff. They've got 1 ounce rounds right now as low as 79 cents over spot. You've got half dollars. I think this is notable for $1.99 over spot for $10 and $100 face value units, but $1.99 over spot, that's a pretty low premium for half dollars especially. And what this is a sign of the negative sentiment which is building in the precious metal space. You see stackers out there. I'm sure some of them must be liquidating their holdings. That is why premiums are coming down. Dealers like SD Bullion are having to lower premiums, try to entice buyers into the market, and that is why we are seeing these premiums come down. And so, if we get a pullback in the spot price and premiums remain low, I would view that as the good time to buy. It's not financial advice or anything. I've seen a lot of these comments lately. Someone just put it in the chat. Is silver a good investment? Well, look, it's really not even an investment by a lot of people's standards. I mean, silver, if you ask me, is money. It's just a hard, tangible form of money. Same for physical gold. It's, the dollar that the value of which changes so frequently, the fiat dollar, which is backed by nothing. It's more of like a long-term savings account, if you ask me, than an investment. Maybe you could view it as an insurance policy against a currency crisis. If you're looking for, a traditional investment, you buy it, you wait for it to go up and you sell it, you might be disappointed with physical metal. I mean, it's not the sort of thing you trade in and out of. Now, is it possible that we get some kind of a debt crisis, a currency crisis in the short term? Sure. If that does happen, I guess you'll be glad you have some gold and silver, although overall you'll probably prefer that it not have happened. So that's how I kind of look at things. Stack physical metal. If you want to trade in and out of something, there are paper vehicles that you can trade silver with if it's something you watch. But no, in general, silver is not really an investment. I mean, there are companies who mine this stuff, gold and silver miners, which are an investment. None of this is investment advice, by the way. But yeah, gold and silver miners, I mean, they're ridiculously undervalued. We've got some videos coming out next week about that, so keep an eye out for that. Anyway, yeah, someone here says, this is an interesting comment, 50% off its 80 to 11, 2000, I'm assuming this 1980, 2011 nominal high. Stackers have been murdered. Keep stacking, guys. Well, yes, you are right. Silver is 50% of its 1980 high. I guess if you stacked a bunch of silver in 1980, that was rough. If you've been stacking at the low prices that we've had over the past decade, if you've taken advantage of the opportunities when silver was below $20, I mean, very recently, I was calling those buying opportunities all along, you're probably doing okay. I mean, I'd have to look at a spreadsheet. I'm pretty sure my dollar cost average is below today's spot price, so I don't really feel like I've been murdered, but if you get a pullback, what I like to do is buy the dips. That's just what I like to do. Not necessarily for everybody, but look, if you're heading into 2024 during this time of, potential World War III escalations, potential debt crises, potential massive money printing by the Federal Reserve, potential cyber attacks targeting the digital financial system, and you don't have any physical assets, well, I'd say that you're really the one at risk of being murdered. You want to have a insurance policy against that, and physical assets, time and time again throughout history, have proven to be an effective means of insulating yourself from the worst effects of financial crises. So if you think it's a good idea to have some physical assets without counterparty risk in your possession, then yeah, silver's a good thing to stack. If you're looking for something that's going to return, NVIDIA type returns, looking for 100 bagger or something like that, well, let's just put it this way. If gold and silver turn into 100-baggers, it's because the dollar has depreciated massively. And all you've really managed to do is preserve purchasing power through to the other side. But that could be a huge advantage. If everybody's been impoverished by inflation, then people with hard money, I think, will be able to acquire assets. I do think that the relative purchasing power of gold and silver in such a situation will be higher than they are today. But that's just kind of speculation. It's how I see things going in some potential scenarios. So that's why I continue to stack gold and silver. But that's about it. So keep an eye out later this week, folks. Expect the situation in the Middle East to get much worse. Expect inflation to move higher. Expect crude oil to go higher. If you need to buy something, probably now is a good time to buy it. And you might get an opportunity to buy some gold and silver on the cheap on Thursday, should we get a pullback. If we do, I would expect it to rebound sharply. That's what we saw with gold after the CPI report. We can go back to that chart and you can get an idea of how short-lived these sell-offs can be. We had the price of gold dip down below $2,000, but you can see it didn't stay there very long, and now we are well above 2,000 once again. I do think 2,000 is the new support for the price of gold. If we get a real hot inflation number, which of course is possible given everything going on in the world, you might see the price take a dip, maybe even down below 2,000 again. I mean, who knows? I don't have a crystal ball, but anything below 2,000 I would personally view as a major buying opportunity for gold. And silver, even at its current price, is just ridiculously cheap, but it might get even cheaper. So let me know what you think in the comments down below about the topics we covered in today's video. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.